Got it?
Okay, you got it?
Yes.
Perfect.
Good afternoon, everyone. Thank you so much for joining our Lunch and Learn series. I'm Rashmi Rangan with the Delaware Community Reinvestment Action Council. This program is brought to you by Our Money School and the Low Income Tax Clinic. It is my honor and an absolute privilege to have Yvette Brooks Williams, our guest, take it away, a strong DCRAC partner. We are going to get ready for this filings tax season. Thank you, Yvette, all yours.
Thank you, Rashmi. Good afternoon, everybody. I hope that you enjoy this lunch and learn and that you're actually having some great lunch to go along with this great learning. So we just want to talk about getting ready for taxes for 2022. Tax planning is for everyone. So get ready to file your 2021 federal income tax return, and planning ahead can help you file an accurate return and avoid processing that can slow your tax refund. So what I'm going to try and provide during this presentation is steps you can take now to make tax filing easier for 2022, what's new and what to consider when you file in 2022, and some IRS.gov resources and online tools. Let's see here. So to help taxpayers and tax professionals, the IRS has launched a special new page on IRS.gov to provide the latest details and information affecting the 2022 filing season and ongoing efforts by the agency to address the inventory of previously filed tax returns. So this is what that page looks like. And this page will be updated with special alerts covering a variety of information and developments for people preparing their tax return, awaiting processing of a return or refund, and the latest updates on IRS letters or notices. Newer updates will be placed towards the top of the page, and the IRS will also provide critical updates through social media. So if you're not following us on social media, look for us and follow us if you want to keep up with us. So let's talk about what to do to get ready. Organized tax records make preparing a complete and accurate tax return easier. It helps avoid errors that lead to processing and refund delays. Individuals should have all their tax information available before filing to ensure the return is complete and accurate. They should notify the IRS if their address changes and notify the Social Security Administration of a legal name change. Now, remember, most income is taxable. Record keeping for individuals includes Form W-2s from your employers, Form 1099s from banks, issuing agencies, and other payers, including unemployment compensation, dividends, distributions from a pension, annuity, or retirement plan, a Form 1099-K, 1099 miscellaneous, W-2 or other income statement for workers in the gig economy, Form 1099 INT for interest received, other income documents and records of virtual currency transactions. Income documents can help individuals determine if they are eligible for deductions or credits. And additionally, people who need to reconcile their advance payments of the child tax credit and premium tax credit will need their 2021 tax information. Those who receive the third economic impact payments and think they qualify for an additional amount will need their stimulus payment and plus up amounts to figure and claim the 2021 recovery rebate credit. Taxpayers should also keep end of year documents, including letter 6419, which is the 2021 total advanced child tax credit payments to reconcile advanced child tax credit payments. Also letter 6475, which is your total 2021 economic impact payment to determine eligibility for the recovery rebate credit. Form 1095A, which is the health insurance marketplace statement to reconcile advanced premium tax credit. Online account securely provides tax account information on IRS.gov, and it helps provide important filing information. Now, to view your account online, use online account to securely access the latest information available about your federal tax account and see information from your most recently filed tax return on irs.gov. Taxpayers who access online account can securely gain entry to the Child Tax Credit Update portal to see their payment dates and amounts. Taxpayers will need this information to reconcile their advanced child tax credit payments with the child tax credit that they claim when they file their 2021 tax returns. Eligible individuals claiming a 2021 recovery rebate credit can log into their online account to see their economic impact payment amounts so that they can accurately claim the credit when they file. Individuals who have not set up an online account yet should act soon to create an account. And people who have already set up an online account should make sure they can still log in successfully. Taxpayers with questions about how to create an online account or how to reset their username or password can find help by going to irs.gov, and up in the top right-hand corner in the search bar, you can just type in how to register for certain online self-help tools, and you'll be able to get to the online account registration from there. Individuals should act now if they need to create an account. If you're unable to verify your identity online, there is a mail-in option you can use. And of course, that's going to take just a little bit longer. Now, taxpayers who have an online account, here are some things you can do with it. You can view the amounts of your economic impact payments. You can access the Child Tax Credit Update portal for information about your advanced child tax credit payments. You can view key data from your most recent tax return and access additional records and transcripts. You can view details of your payment plan if you have one, and you can view 5 years of payment history in any pending or scheduled payments. So there's a lot of information you can get from your online account. And I know some people, when they receive the letters about the child tax credit and about the economic impact payment, may not have held on to those letters, may not remember how much they received. So the online account is a great way to get that information so that you can accurately file your tax return. Now, individuals may want to consider adjusting their withholding if they have owed taxes or received a large refund last year. Changing your withholding can help avoid a tax bill or let individuals keep more money each payday. Life changes, getting married or divorced, welcoming a child, or taking on a second job may also be reasons that you may want to change your withholding. Taxpayers might think about completing a new Form W-4, which is the Employee Withholding Certificate, each year and when personal or financial changes or situations occur. People need to also consider estimated tax payments, especially individuals who receive a substantial amount of non-wage income like self-employment income, investment income, taxable Social Security benefits, and in some cases, pension and annuity income should make quarterly estimated tax payments. The last payment for 2021 was due on January the 18th of 2022. Individuals can log into their online account to make a payment online or go to irs.gov/payments. If you have an I-10, you want to check your individual tax identification number, which we refer to as an I-10. And an I-10 only needs to be renewed if it has expired and is still needed for a U.S. federal tax return. Now, if your I-10 wasn't included on a U.S. federal tax return at least once for tax years 2018, 2019, and 2020, then your I-10 will expire or did expire on December 31st, 2021. And as a reminder, I-10s with the middle digits 70 through 79, 80 through 88, they have already expired. In addition, I-10s with the middle digits 90, 91, 92, 94, 95, 96, 97, 98, or 99, if they were assigned before 2013, have also expired. Now, if you previously submitted a renewal application and it was approved, you do not need to renew again. So let's talk about getting bank to speed the tax refunds with direct deposit. So of course, the fastest way for you to get your tax refund is filing electronically and choosing direct deposit. Direct deposit gives you access to your refund faster than a paper check. And if you don't have a bank account, you can talk to Rashmi over at DCRAC. They can help you out over there. You can learn how to open an account at an FDIC insured bank or through the National Credit Union Locator tool. If you are a veteran, you can see the Veterans Benefits Banking Program for access to financial services at participating banks. So 8 out of 10 taxpayers get their refunds by using direct deposit. The IRS uses the same electronic transfer program to deposit tax refunds that is used by other federal agencies to deposit nearly 98% of all Social Security and Veterans Affairs benefits into millions of accounts. Direct deposit also avoids the possibility that a refund check could be lost or stolen or returned to the IRS as undeliverable. And it saves taxpayer money. It costs more than $1 for every paper check that is issued from the IRS, but it only costs 10 cents, just 1 dime for each direct deposit. Now, if you received advance payments, when you file your 2021 tax return, you will need to compare the advanced child tax credit payments that you received during 2021 with the amount of child tax credit that you can properly claim on your 2021 tax return. The fastest way for you to get your tax refund that will include your child tax credit is by what? Filing electronically and choosing direct deposit. Now, if you receive less than the amount that you were eligible for, you will be able to claim a credit for the remaining amount of the child tax credit on your 2021 tax return. And if you receive more than the amount you were eligible for, you may need to repay some or all of that excess when you file your tax return. Now, in January of 2022, the IRS started sending out the letters I spoke about earlier, the letter 6419, to provide the total amount of advanced child tax credit payments that you received in 2021. You need to keep this and any other IRS letters you received about advanced child tax credit payments that you receive with your tax records and refer to them when you file. And again, if you don't have it, sign up for that online account and you'll be able to find the information there. Oh, I stuck? Okay, here we go. Individuals who didn't qualify for that third economic impact payment or did not receive the full amount may be eligible for the recovery rebate credit based on their 2021 tax situation. Now, the fastest way for you to get your tax refund that will include your recovery rebate credit is by filing electronically and choose a direct deposit. If you receive the full amount for your third economic impact payment, you won't need to include any information about it when you file your 2021 tax return. However, if you are eligible, you will need to file a 2021 tax return, even if it's not something you normally do. So if you don't usually file, but you're eligible, you will need to file in order to claim the recovery rebate credit. So again, to avoid processing and refund delays, and file an accurate return, you will need the amount of the third economic impact payment and any plus-up payments you receive to calculate your 2021 recovery rebate credit using the 2021 recovery rebate credit worksheet or some tax preparation software. In early 2022, we sent out letter 6475 to provide the total amount of the third economic impact payment, any plus-up payments that you receive. And again, this is something you would need to keep with your tax records. And also, if you don't have it, sign up for the online account and you can see that information there. Now, if you didn't get the full amount of the first or second economic impact payments, you may be eligible to claim the 2020 recovery rebate credit, but you must file a 2020 tax return to do that, even if you don't normally file. And if you're eligible and didn't claim the credit on your original tax return, you will need to amend your 2020 tax return and claim the recovery rebate credits. And you can just see irs.gov/RRC if you need more information on that. So many different factors can affect the timing of your refund after you receive your return. And although the IRS issues most refunds in less than 21 days, the IRS cautions taxpayers not to rely on receiving a refund by a certain date, especially when making major purchases or paying bills. Some returns may require additional review and may take just a little bit longer for us to process. For example, the IRS, along with its partners in the tax industry, continue to strengthen security reviews to help protect against identity theft and return fraud and refund fraud. Additionally, refunds for people claiming the earned income tax credit or additional child tax credit can't be issued before mid-February. So we've just started sending those refunds out recently. The law requires the IRS to hold the entire refund, even the portion that's not associated with earned income tax credit or the additional child tax credit. Some returns filed electronically or on paper may need a manual review, delaying the processing if our systems detect a possible error or if there's information missing, or even if there's suspected identity theft or fraud. And some of these situations require us to correspond with taxpayers, but some of them don't. This work does require special handling by an IRS employee. So in these instances, it may take the IRS more than the normal 21 days to issue any related refund. In those cases where the IRS is able to correct the return without corresponding, we will send an explanation out to the taxpayer, just letting them know what we did to change their return if we had to. So let's talk about what's new for earned income tax credit and the child tax credit, beginning with these 2021 tax returns. So just to set the stage, all of the changes under the American Rescue Plan Act are designed to provide relief to taxpayers. So some provisions of the act apply only to tax year 2021, and some are permanent. Now, as you know, there are basic rules that apply to all taxpayers claiming their earned income tax credit. Now, along the top of this slide, you'll see the top and the bottom. So the top row, the blue row, and the bottom, the purple row. You'll see the basic rules or parts of the earned income tax credit that have not changed for 2021, such as having earned income and adjusted gross income within certain limits, and not being able to, and not being the qualifying child of another taxpayer. All of that, all of those rules remain unchanged. However, what is new is shown in the green shapes across the middle row. So for tax year 2021 returns only, if eligible, can elect to use their 2019 earned income if it's higher to compute their 2021 earned income tax credit. But let me be clear, you cannot use your 2020 earned income. However, you can reach back to your pre-pandemic 2019 earned income if it benefits you to do so. Now, these next two pieces are permanent changes for the earned income tax credit. First, your investment income must be $10,000 or less indexed for inflation after 2021. And you might remember that the limit used to be $3,600 of investment income. So that's a substantial change. And secondly, starting with 2021 returns, a new rule provides relief to certain separated spouses, which we will discuss shortly. And also note that under the American Rescue Plan Act, there are specific rules that apply to earned income tax credit claimed by taxpayers in the United States, territories, and certain possessions of the United States, such as Puerto Rico or American Samoa. So let's dig into the new rule for separated spouse provision right now. What is the new rule beginning in 2021? So basically, in general, we know a married taxpayer must file jointly to be able to claim the earned income tax credit. That's been the rule forever. Now, the new rule creates an exception to that general rule if these conditions are met. So one, the taxpayer who is a separated spouse can be treated as unmarried for earned income tax purposes. They don't file a joint return. the taxpayer resides with their qualifying child for more than half the year and separation from spouse. So the taxpayer does not have the same principal place of abode as their spouse for the last 6 months of the year, or has a decree, instrument, or agreement with their spouse and is not a member of the same household by the end of the tax year. And I know you are all thinking this sounds a lot like the same old rule that allowed the married taxpayer to be considered unmarried and file as head of household to claim the EITC. Now, it's similar, but you may have noticed you may now treat yourself as unmarried, even if you do not pay more than half of the household upkeep expenses. So for example, this new relief can apply to a separated spouse living in a shelter with their child. So that wasn't the case before, but that is the case now. So those taxpayers claiming earned income tax credit without a qualifying child are referred to as childless EITC. So remember, these three rules apply to all taxpayers that claim childless earned income tax credit. 1, you must be within a certain age range. 2, you cannot be the dependent of another person. And 3, you must reside in the United States for more than half of the year. And residing in the US means the 50 states and the District of Columbia. Now, although there are no new permanent rule changes for childless EITC, there are a few new rules providing temporary relief just for tax year 2021 returns. So for childless EITC, the credit amount is higher, the earned income limit and the income range for credit phase out are both higher, and the age limits have been modified, or you can say relaxed, for 2021 returns. So just to frame this up, a person claiming childless earned income tax credit cannot be the qualifying child of another taxpayer, and they cannot be the dependent of another person. Why does that matter? Well, in general, these relaxed age requirements are going to end up benefiting, for example, more working young adults, as well as working senior citizens. Now, with that said, what's the maximum age? So the answer is that for 2021 tax returns, there is no upper age limit. And I don't know if you remember this, but it's historically been under the age of 65. So what's the lower age limit? Well, the general rule for 2021 tax returns is that you can be as young as 19, with certain taxpayers being eligible as young as the age of 18, and others not becoming eligible until they reach the age of 24. All right, so who are those eligible 18-year-old clients? A former foster youth is a person who at age 14 or after age 14 was in foster care under a plan being administered under the Social Security Act, and who agreed to disclosure of that information to the Internal Revenue Service. A qualified homeless youth is a person who certifies to the IRS that they are an unaccompanied minor or youth who was homeless, or they are unaccompanied and at risk of homelessness, and they are self-supporting. At this time, it is expected that you will use a checkbox on the return to indicate whether you're under the age of 19 and meet the requirements to claim childless EITC. Now let's turn to specified students and what that means. So what that means is, well, let's put on our American Opportunity Tax Credit hat for just a second. So a specified student who can claim childless EITC beginning at age 24 is an eligible student within the meaning of the American Opportunity Tax Credit rules for a period of at least 5 months during 2021. And a caution might be helpful here. Many of the eligible students, again, within the meaning of AOTC rules, who are under the age of 24 and eligible for the AOTC, many of them are not going to be eligible for the childless earned income tax credit because they fall under the definition of specified students. The last thing I want to note here is that you must be clear on how this relief provision for the EITC rule works so that you can take care to meet due diligence requirements and file an accurate and proper return. Now, there are no new eligibility rules for an EITC qualifying child. And just as a reminder, a child for earned income tax credit must have a valid Social Security number and meet the 4 tests. They are the relationship, age, residency, and joint return test. And another reminder, if the child might be the qualifying child of more than one taxpayer, pay close attention to those tiebreaker rules. And if you need more information on tiebreaker rules, you can refer to publication 501, which is the dependents, standard deduction, and filing information publication. So let me just quickly recap the 4 basic rules for a child to be claimed for the earned income tax credit. The child must be your biological, adopted, stepchild, or foster child, or their descendants, or your brother or sister or their descendants. And let me emphasize here that there are no changes to the age rules for an earned income tax credit qualifying child. And just like before, the child must be younger than you or your spouse and under the age of 19, or younger than you or your spouse and under the age of 24 and a full-time student, or be any age, even older than you, if totally and permanently disabled. And as always, the child must have lived with you for more than half of the year in the United States, and the child must not have filed a joint return unless they filed that joint return only to claim a refund of withholding or estimated taxes paid, and they are not otherwise required to file a return. So here on this slide, it's just a reminder of the requirements for the taxpayer identification number for earned income tax credit. Remember, social security numbers must have been issued on or before the due date of the return, including any extensions. And generally, you can be eligible for a childless EITC if none of your children meet the valid social security number requirement. So I just want to do a quick recap because I feel like I gave a lot of information about earned income credit. So I just want to do a little recap on it. So the rules for everyone: you must have earned income. Your adjusted gross income must meet the qualifying criteria. You must have a valid social security number by the due date of your return, including any extensions. Your filing status can't be married filing separately. You can't file Form 2555 that relates to foreign earned income. And your investment income must be below a certain amount to qualify. Now, excuse me, rules if you have a qualifying child. Your child must meet the relationship, age, residency, and joint return test. Your child must have a valid social security number. And remember, social security numbers must have been issued on or before the due date of the return, including any extensions. And for non-citizens, the number must not have been issued to receive a federally funded benefit. Also note that if you have children who could be claimed for the earned income tax credit, except that none of them meet the valid social security number test, you can claim the childless earned income tax credit, assuming, of course, you otherwise qualify. And remember the tiebreaker rules: your qualifying child cannot be used by more than one person to claim earned income credit. You can't be a qualifying child of another person. Now, these are the rules if you do not have a qualifying child, and this is the childless EITC. You must be at least age 25, but under age 65. That's the rule, period. It's just a little bit different for 2021, which we just talked about. But the general rule is you have to be at least 25 and under age 65. You cannot be the dependent of another person. You cannot be the qualifying child of another person. You must have lived in the United States more than half of the year. You must be a US citizen or resident alien all year. And remember, the age limits, as I said, were modified for 2021. And this is something new to consider for the childless earned income tax credit for 2021. Please be aware of and avoid the most common errors we are seeing among taxpayers claiming their income tax credit, and be sure that any EITC child claim meets the relationship and residency test, and don't forget those tiebreaker rules. Now, if you are self-employed, Make sure that you accurately determine your business income and expenses. And lastly, keep a careful eye on the rules for the married taxpayers claiming the earned income tax credit. Married taxpayers cannot claim EITC unless they file jointly or meet one of the exceptions to be considered unmarried or treated as unmarried that we talked about earlier. We do have a publication, 596, which is titled Earned Income Credit, and it's an excellent resource for you and anybody else who's curious or needs questions answered about the Earned Income Tax Credit. Again, that is publication 596. So we're going to talk just a little bit about the temporary suspension of notices and letters. The IRS announced the temporary suspension of more than a dozen additional letters and notices, including automated collection notices and letters the IRS sends when it has no record of a taxpayer filed a return. So on the slide you see now are the additional notices that have been suspended. And as a part of ongoing efforts to provide additional help for people during this period, the Internal Revenue Service announced on February the 9th the suspension of more than a dozen additional letters, including the mailing of automated collection notices normally issued when a taxpayer owes additional tax and the IRS has no record of a taxpayer filing a tax return. These mailings include balance due notices and unfiled tax return notices. The IRS entered this filing season with several million original and amended returns filed by individuals and businesses that unfortunately still have not been processed due to challenges of the historic pandemic. And we're taking this step to help avoid confusion for taxpayers and tax professionals. These automatic notices have been temporarily stopped until the backlog is worked through. The IRS will continue to assess the inventory of prior year returns to determine the appropriate time to resume the notices. I'm sure that we'll give an announcement when we're going to resume them, just as we gave this announcement that we were going to suspend them until we can catch up on this backlog and cause less confusion to our taxpayers out there. So on this last slide I have here, I just wanted to put some additional resources on here and make your first stop irs.gov, where you'll find online tools to help you get the information that you need. The tools are easy to use and available 24 hours a day. Millions of people use them to help file and pay their taxes, find out information about their accounts, and get answers to tax questions. I go to irs.gov, and I was about to say it's because I work here, but even when I'm not at work, and one of my friends asks me, is asking me questions, I go to irs.gov, find the answer, and then point them to irs.gov where they can find the answer. The search bar would be your best friend on irs.gov, because if you don't know where to look, if you just type any part of what your question is going to be in that search bar, it'll take you to the right place in irs.gov. I just want to say thank you to Rashmi and DCRAC for this lunch and learn. I hope you guys had some good lunch and were able to take some good nuggets away from this presentation. And I thank my colleagues for being on here and being supportive. And I thank all of your guests, Rashmi. But DCRAC is an awesome partner with the IRS. I love how they are always available for us to come and share information with the community, because they are community driven, and I love it. I love it.
Thank you, Yvette. This was so much information, and I waited for your presentation to be completed. So there were a few things that I pulled out, and because we have a little time, I'd like to digest them. First, let me repeat some of the information that you gave. It was a lot of information, right? But let's start with the one thing you said: the quickest, the fastest, the safest way to file accurately and receive your refund is to file electronically and have your refund deposited directly into your account. If you have a deep connection with the city of Wilmington and do not have a bank account, if you have not heard about Stepping Stones Community Federal Credit Union, this is where you're here right now. Open an account and have your funds directly deposited. Electronic filing is critical and key. When you paper file, there are potentials for errors, but that paper filing, when it reaches the IRS, is actually typed into the system by an IRS official with the kind of backlog IRS has built in. This increases the delay. The second thing, actually, one stat you said 8 in 10 use direct deposits. With millions of people filing, there are millions who wait for paper checks. Postal delays are real. I had a very important document sent to us in November, which reached us in February. Remember, some checks become stale after a period of time and you aren't able to deposit. So right now, technology is indeed your best friend. The second thing Yvette talked about was the advanced child tax credits. They're wonderful. They were wonderful for folks that received. But because there will be a reconciliation that you have to do when you file your 2021 returns, either your refund will be smaller or you might end up owing Uncle Sam. That is the situation. We have the low income tax clinic that we operate. Contact us and we'll try and work with you and the IRS. Allergies. Yvette, can you repeat about the earned income tax? So sorry. The earned income tax credit and using 2019 income to determine whether if you used your 2019 income, would your earned income credit be bigger versus using your 2021?
All right, so one of the reasons that we have that rule in place is because so many people were affected in 2020 with COVID. Some people didn't work or received unemployment, so they didn't have earned income. So if that is your case and your earned income was higher in 2019 than it was in 2020, that's why we allow you to go back to 2019 and use that higher earned income, because it would be more of a benefit for you for your for receiving that earned income tax credit.
Thank you so much for helping me out. The other one, a very critical one, folk who do not have children, the childless earned income tax credit. Most of them think, oh, EITC is only those who have children.
Right.
Very important key distinction, and particularly for 2021 tax year, is the expansion, if you will, of folk that can file for the earned income tax credit and how large it is this particular filing season. So please don't think that this could be a case of frivolous filing. Call 211 in Delaware and find a tax site, the VITA sites that can prepare your returns. They are trained with all the credits and deductions that you could claim, and make sure that you file this year. Because the only way you will get many of these refunds, particularly the recovery rebate, is if IRS knows you exist. And the way IRS knows you exist is either Social Security Administration, that you're getting a Social Security, disability, or pension, or something, or you filed a return. So normally there is a frivolous filing penalty, but in this particular instance, the only way to get your rebate could be because you have to file a return. So please file your returns.
And that's so true. Yeah, let me just chime in on that. That's so true. So many people feel that they may not be entitled to the credit because they don't file a tax return. And in order to get the credit, you do have to file a tax return. It doesn't mean that you had to have income, but you still have to file the return so that we could get the refund out to you. So yeah, thanks for bringing that up, Rashmi.
The other very critical thing is one person can be claimed as a dependent by one taxpayer. So if I'm 18, oh my God, I don't want to be 18 anymore. But if I'm 18, earning an income and file taxes to get my earned income credit, my parents cannot claim me as a dependent and get a bigger credit. So if there are 3 people in my household, I could file an earned income credit because I'm earning an income at the age of 18, but then my parents cannot take me. And the happiest I am is about the suspension of notices. Because during the pandemic, IRS shut down, but the notices kept going out saying you owe us money. So there was this total mismatch, and our low-income tax clinic was incredibly intensely burdened. So if anyone here has any questions, we do have a few minutes to answer those questions, but if not, this recording will be posted, and Yvette and I will be available to answer any questions anyone has.
Absolutely.
I think I don't have any questions. I learned a little bit and I took a couple of notes and I think I'm good.
Thank you.
It was just very informative and you were very well in your presentation of the information so it could be understood.
Oh, thank you for that. I appreciate that.
So with that, we will meet again at some other lunch and learn in the future, but we'll keep an eye on what IRS is up to. And if there are any interesting things that we in the community need to know, Yvette and I will be delighted to share that information.
Absolutely. Absolutely.
Thank you.
Thank you everyone so much.
Yes, thank you so much for joining.
And have a very good rest of your day.
Thank you, you as well, you as well. Thank you so much. All right, Rashmi, how do we, let me stop the sharing here. Oh,
Yeah, I want to make sure that our recording is available. So I'm going to leave.
Bye.
Mm.